We have one more set of trading calls to put on the table. The F&O calls. Yogesh Mehta, Vice President, Equity Advisory of Motilal Oswal Securities, joins us now. Yogesh, good morning. Extremely difficult day, I would assume, since we saw a fairly seminal fall yesterday, on Friday. Would you trade the Nifty? How would you?
Good morning, Lata. And since we have seen extreme volatility on Friday and again on Nifty front, 10,980 seems to be a multiple hurdle and multiple failure of attempts to cross over this level, but it has been failed for last 6 weeks. So it seems it will remain a Mount Everest hurdle. And on the lower side, 10,750 and 10,650 are the levels to watch out for. So today, if Nifty opens at around stable level 10,780 odd, 10,840 could be the level we can see on the recovery mode, or otherwise on the lower side we can see that sliding towards 10,730.
Okay.
That's still confident, 10,730.
All right. We are getting you a lot of the flashes on what's taking place in the conference call. Very important statements coming in there. The management saying that all the lenders have shown value and trust in the promoter group. They met the lenders over the weekend. We know that, but they're saying that there's no default in repayment just
that's the most
yet.
Important
that
part.
is the most important statement, yeah. So
no default just yet. But for the future, they seem to want munificence of the lenders for any possible delays, but no default so far. Okay. Yogesh, sorry for that interruption. There will be a lot of flashes that will come on Z. What stocks are you trading today?
For the stocks today, it seems that TCS has done wonderfully well in the last week, and 1880 seems to be a strong support. So keeping that in a trading stop loss, target could be in the range of 1990 to 2000 level. So that can be traded because it has formed head and shoulder pattern on the lower time frame with crossover over 50-day EMA. The other one is, other two are on the sell side. One is Jubilant Food, which is not crossing over 1240, 1250 level. It's an important resistance level. So one can keep a stop loss of 1230 on a future segment, and current price is 1198. Target could be in the range of 1140 to 1130 level. And one more is sell side is Bharat Heavy Electronics. Current price is 66. Target could be in the range of 61, 61.5 with a stop loss of 69 because it has done a formation of inverted cup and handle and bearish angle swing on a weekly basis.
Okay, just before we let you go, any thoughts on how to approach Maruti?
Maruti has again touched its important level of 6,500 after maybe 5-6 months. So if it sustains below this level and breaches further, then we can see 61, 61.50 further, and this time stop loss could be in the range of 69, 69.50.
Okay. All right, Yogesh, thank you very much for joining us with your thoughts on a bunch of stocks. We are getting the important lines from Z Entertainment. We will get you an expert after we get everything. We have some experts waiting by to parse the key takeaways from the conference call, but let's wait by. There's no point trying to analyze it when the call is halfway through. I'm sure there will be more details on what is the extent of repayment due in the next 6 months, what is the amount in danger, and what have the lenders said. As well, where are the talks in terms of sale of the asset itself? We should be getting some more details from the conference call in just a bit.
They've also said they don't foresee a further invocation of the pledge shares. So that's the latest comment that they've made at the conference call.
Yeah. You know, that also came in that letter over the weekend, the press release over the weekend that those who are holding the pledge shares have committed not to sell in. But that's a commitment. We have to just wait and see how sacred is that commitment. Okay, there are other stocks that we will have to keep on the table, and key among them would be Escorts results due today. Sonia, if you can tell us what the street is expecting.
It's a good quarter that Escorts has seen, specifically in the farm equipment segment, which is the tractor segment, which has done very well. And that's the reason the stock is up 30% from the October lows. Now, a revenue growth of 34% is what we're expecting. That's because tractor sales were very strong. 36% growth is what we saw in this quarter. Market share gains continue. But more importantly, if you remember last quarter, it was the construction and the railway business which picked up. That is expected to continue this quarter as well. In Q2, the management told us that demand for cranes, loaders, compactors have surged quite a bit. That took the volumes up 37%. That segment is expected to grow this time around as well. So revenue growth of 34%, EBITDA growth of 37%, and a profit growth of 42%. But perhaps a lot of it could be in the price. As I said, the stock is up 30% from the October lows. A whole host of other non-index stocks coming out with numbers. We'll talk about that on the other side of the break. We'll also come back just in time for the pre-opening rates. SP Tulsian and Udayan Mukherjee will also be with us. Stay tuned.